I don't know how I can follow the last presenter. He comes with all sorts of toys. I don't have anything like that we can pass around. That was some excellent, excellent products. Thank you very much. Well, as Bob mentioned, my name's Tom Dubrey. I'm a certified public accountant here in Massachusetts. I've been doing this for over 10 years. I have my own practice in Sturbridge. I specialize in individuals and small businesses throughout Massachusetts. And I wanted to talk a little bit about some of the tax credits that are available for people this year regarding energy efficiency to their homes and upgrades to their heating systems. These are credits that were around back 3 or 4 years ago. They had started, and then they phased out for about a year or two, and now they're back again. And they haven't gotten a whole lot of attention because there's other credits out there that seem to be attracting all the attention from the media. One of which is the first-time homebuyers credit, which was $8,000, and you still have 3 days to lock into a binding purchase and sale agreement. If you can pull that one off, I'd be very impressed. But at any rate, what's great is that there are other credits available like these credits that are out there and can help people. This is a great time to buy a house, and if you're a first-time home buyer, you get the $8,000 credit. Then you move into the house. It needs new windows, doors, insulation. It needs a new furnace. It needs all sorts of improvements, and you can get up to $1,500 in energy credits for those improvements as well. So I actually had that scenario play out a few times over this last tax season, and I had several people that got refunds in excess of $10,000, mainly because of these credits. Of course, they think I'm the hero, but I'm not the hero. I'm just the scorekeeper. That's the way I look at it. So one thing I wanted to start with is just an explanation. I throw the word credit around a lot, and I'm not sure if people really understand the difference between a credit and a deduction. Okay, so just as a general overview, so you understand the power of a credit. A deduction is like what you take on Schedule A, for those of you who do your own taxes, is an itemized deduction. An itemized deduction would allow you to reduce your taxable income. That would reduce your taxable income to which the tax rate is applied. So if you're in the 15% tax bracket and you have a $100 deduction, you gain $15 in tax or $15 in refund. Now, to the contrary, if I offer you a $100 credit, a $100 credit gives you $100 of tax, or of refund, I should say, in your pocket. So credits are much more powerful than deductions because it's dollar for dollar tax. That's an important thing to realize. So I wanted to talk, like I said, about some of these residential energy credits that are available this year. But before I do, I will mention this, that one thing, and I was talking to Bob about this earlier in the week. I caution everybody that tax credits are a great thing. However, it doesn't necessarily make sense to spend money just to get a tax credit, okay? So, if something, in order to max out the credits that I'm going to talk about here tonight, you'd have to spend $5,000, okay? Well, you're going to get a credit of $1,500, but you still spent $3,500 net. So make sure that the expense makes sense for you, and make sure that the savings that you're gonna receive from that makes sense over time. It's part of just good money management. So I always say, don't let the tax tail wag the business dog, because it's just, that would be bad advice for anybody. That being said, there are some great credits out there. The first one that we're going to talk about are the residential energy credits. Okay, and the residential energy credits are actually 2 credits combined. Okay, and as it says on the PowerPoint slide here, the credits are worth 30% of the cost of the amounts paid for qualified energy efficient improvements and or the amounts paid for residential energy property for a maximum credit of $1,500. Okay, so I'm sure that, of course, that leads into my next discussion. What is a qualified energy efficient improvement? Great question. Thank you for asking. So we go into qualified energy efficiency improvements. What qualified energy efficiency improvements are basically building envelope components. Okay, so what we're talking about is the roof, the insulation in the walls, insulation on the exterior of the house, exterior windows, doors, things of that matter. So in particular, some of the items that qualify is most of your insulation material. The pink stuff in the walls, the things that they spray in the walls, the things that help to reduce your heat loss in the house. I can tell you just from experience, I have my cousin, who's actually also a good friend of mine, bought a house a few years ago that had absolutely no insulation in the walls, none. The windows were probably over 50 years old, and the roof was ailing as well. And it was like somebody had a straw in his oil tank, and it was just sucking the oil out of the tank. He had to have a delivery every 2 weeks of a full tank of oil. So he was going through like 500 gallons a month in oil for a I don't know, 1,700 square foot house. It was terrible. So he had the insulation blown through his house. You must see that every now and then. You must. So he had insulation blown into the walls of the house, and that insulation qualifies for the tax credit, and it cut his heating costs almost in half. It was crazy the amount of money that he was able to save by doing that. So that's a good thing to do. They also talk about metal or asphalt roofs, but be careful, because with roofs, it's not all roofing material that qualifies. Okay. Generally speaking, it has to be pigmented with coatings or cooling granules that are designed to reduce heat gain. So it's specific roofing materials that will qualify for that tax credit. With any of these credits, they have to be done, I think I mentioned on the first, I didn't, I may be jumping ahead a little bit, but they have to be on your principal residence, okay? So if you own an apartment building that you don't use as your principal residence, you can still use that as a business expense, or perhaps a capital item that needs to be depreciated over time, but it would not qualify for the residential energy credits because it must be in your primary residence in your house.